All right, welcome to Hard Hats High Heels. Today we're with Yvonne Silvers with Bankers Trust. She is the Vice President and Loan Originator here at Bankers Trust. And today we're at the Ankeny office, but you service a couple different offices here, and maybe you can talk briefly about what you do here at Bankers Trust.
Well, I am a mortgage loan originator, and I've been with the bank since 1995, so I've been here a long time. I have an office in Clive and also in Ankeny, but go to every branch downtown. You know, we're mobile in this business, but my main job is to originate mortgage loans, both to purchase, to refinance, whatever the customer needs. Anyway, so that's my main goal, is just to help people get into a new home or refinance whatever they need to do. So,
what about this that do you really enjoy?
Oh gosh, I love, well, the best part of it is I get so much repeat business. I love getting somebody into their first home and then, you know, years later their fourth home or fifth home or whatever, or maybe a second home, and it's just the relationships and providing the service. And because we are local and because we can do things that other lenders and banks cannot do, it's a great experience. I hope for the customer. I mean, that's the rewarding part of my job.
Well, obviously if they're coming back again, you've got a good personality there. You always like to see repeat business.
That's right. Yeah.
So you mentioned a few things that you guys do differently other than other mortgages.
Yeah, we because we are here in the metro, one thing that sets us apart is my processor, my closer, my underwriter, everybody's on site. Most banks that you go to, or most mortgage companies, they have to take their files and send them off to be processed or underwritten. Our decision making for conventional and FHA underwriting is on site, so we have that advantage. The one, you know, with VA we don't, but we have a great investor that we send it to, and they do a quick turnaround time. But everything else is done on site. We do our own closing, so when the customer is ready to close on their house, they come here. They don't go to an attorney's office or to an escrow company. They come to one of the branches or wherever it's convenient for them. So
that's a big deal nowadays, doing everything in Iowa, locally, you know, keeping the money right here. People are going to appreciate that.
Yeah. And we do sell the servicing. We have some local servicers here in the Des Moines area, but you know, we do use the big ones. But who we do sell our loans to, we're very picky about. You know, we want the service on the back end, and of course, if the customer ever needs anything, they can always call us. We're there to help.
So out of my personal curiosity, before we dive into the process here, what's the market look like today? Are we seeing a lot of new home buyers? Are we second homes? What's it look like?
Yeah, it's actually really good. And what's kind of crazy about that, I mean, I think people have been disappointed because their property values have gone down, but at the same time they're taking advantage of that. I mean, they're maybe selling at less than they wanted, but they're buying something that maybe 4 or 5 years ago was selling for 50 or 60 more thousand. If they're stepping up, they're getting a lot of house for their money. And I've seen that more so probably now than I have in the last several years. I've had people that I've done mortgages for, and they're like, I'm going to die in this home, I'm never moving, and they're calling me saying, hey, you know what, we found this house that we've always loved and we want to buy. And so I think people are taking advantage of maybe, you know, getting a really great deal on something that they want, and money's so cheap, rates are crazy good.
So their dream home is more affordable.
It is, yeah, nice. It really is.
So new home buyers, what kind of age are you seeing? Just curiosity.
You know, right out of college. I mean, there's a lot of young people, and I feel like, you know, at least here in Iowa, I mean, I know the economy's been looking pretty sad in the job numbers, but there's a lot of people that are ready to buy. The younger people realize, you know, I'm throwing away $1,000 a month in rent.
Right.
Why can't I own? And that's true. And with FHA financing, it's only 3.5% down. It can be a gift from a relative, so it doesn't have to be their own money.
Perfect.
So they can go out and buy, you know, $150,000, $160,000 house and have a payment equivalent to what they're paying in rent. You know, and that's a big deal for a lot of people. So
get to garden in their yard, do
that's
whatever they want, right?
Yeah, no, exactly. Get a couple roommates or house payments made.
Done.
No, yeah.
So I bought a house about 3 years ago, and it was my first house. I got married and all this, everything thrown at you at once. You know, it's really overwhelming. It was overwhelming to me to come in and go through the whole process.
Right.
So for new home buyers, do you have any tips of, you know, just going into that initially, coming to your door initially?
Yeah.
How can they be prepared?
Well, one thing I always encourage people to do is kind of check their credit ahead of time. I mean, most people have a pretty good idea what their credit's like. I mean, it's not, you know, if they haven't been paying their bills, they know their credit's probably going to suffer a little bit. But you can go to annualcreditreport.com, which is the website most banks recommend to people, not Free Credit Report and not some of those other few places. But Annual Credit Report is a great resource because you can go out there, check your credit scores, look at your credit, and kind of know what's out there. And as lenders, you know, if they want to bring that in and have us look at it just to kind of say, hey, are we ready yet? We're happy to do that, because once we pull credit, it does show up as an inquiry.
Gotcha.
On their credit report, whereas if they go out and do it themselves, it's not going to damage their credit.
Nice. I was going to ask you about that.
So it doesn't show up as an inquiry, but that's a great place to start, because if there is cleanup that needs to be done, or if there's things they need to work on or pay off, we can look at it up front and say, you know, this is what you want to work on, and maybe in 6 months you're ready.
Sure.
And so that's the best thing to do. And then if they are in great shape and everything's a go, then come into the bank and get pre-qualified and pre-approved. And kind of the difference is pre-qualifying is saying, here's how much you can afford based on where your income and your debts are right now. There's kind of a couple layers to that. Once you go through the pre-approval process, they're verifying your income, they're verifying your assets for closing. They're doing a lot more of the legwork, and we can do the pre-approval real easy, where they're verifying what you said is true and you're ready to buy. So there's a couple layers of that, and that's ideal. So when they go out and write an offer, they've got a letter that says, yeah, I've been in the bank, I'm ready to roll.
I'm serious.
And yeah, and the sellers love it, the realtors love it, it makes everybody happy, and they've gotten that initial step out of the way. And so once that happens and they find that home, all we have to do is get the appraisal ordered, the title work ordered. It goes in for one final underwriting just to make sure the appraisal's okay and everything's okay, and we're ready to close. So
something that I noticed when I was going through that process, and they looked at how much money you had and what have you, and I was just a simple scenario. I went from commission to salary. And what I liked about the process, and I know this might have changed since some things have come through the ring, but they allowed you the opportunity to explain why things went from here to here. So it gives you the voice versus them just saying, no, this doesn't look pretty, right?
Yeah.
Yeah. So that's a very nice process.
Yeah, and those kinds of things happen. I mean, you know, that's kind of life. You know, something can happen and things can change, and especially in working, you know, and that's exactly a great point, because there are things that during the beginning, or maybe a raise, or maybe I've had people that actually had to take pay cuts to keep their job, you know, so we pre-approved them at a higher income, and now their income's less.
Right.
So
I like how you can just explain it and they're like, okay, that makes sense.
Yeah.
And then going forward. So it's really taking some of the stress out of
absolutely
those tips. So I've got pre-qualified, I've got my letter, now I can go to the realtor, now I can do some shopping.
Absolutely.
Right.
Yep.
Do you help the new home buyers? I had no idea what a payment would be. You know, my husband and I kind of thought this is maybe what we can roughly afford, but I don't know how that correlates to a house.
Yep.
You guys gonna help us down that road?
Yes, and what I always tell people is, you know, a lot of times people get pre-approved for really more than they probably want to spend.
Yes.
So I always say, what do you feel comfortable with? What's a comfortable house payment for you? Because the one thing, especially, you know, I don't know if you have kids, but you know, when you have kids, I have customers that pay $1,500 a month in daycare.
Yeah.
Well, that doesn't come into play on their debt ratios. It does for VA, but not for conventional FHA. So if you got $1,500 going on a month, you probably don't want a real big house payment in the beginning. And so I always ask people, what do you feel comfortable paying every month? And then I back into what that needs to be in terms of a mortgage. And that should include taxes and insurance and PMI if you have PMI, but it should include everything. So there's no surprises. Your only other expenses are going to be your utilities and normal household things, but you kind of know that comfort level. And the biggest thing with today's market is people are getting such good deals. You know, the houses that they're getting cheaper that were really expensive, the taxes are ridiculous. I mean, you're looking at $5,000 or $6,000 of taxes a year on a house that's, you know, maybe 200 and some thousand. You know, it used to be that was on a $400,000 house. You know, the market's changed so much. You've got to take into account some of that adjustment with the taxes and things.
Can you foresee some of those taxes? Because I know one of the things when I worked through, it was a new house, so I was just paying on, I can't recall right now.
Probably the lot.
Probably the lot, and then a year or so, 18 months later, it was the house. And now, you know, maybe it's the laws that I'm paying more now than what I was. Is that just the way it goes?
It is. On new construction, Iowa is an ag state by nature, so we're a year and a half in arrears on property taxes. So when you buy a brand new construction, they can only collect taxes based on whatever those lot taxes are. So it might be $12 a year, and we're paying collecting $1 a month. And